Hello everyone and welcome to the Monday Open hosted by the Vantage private client team. My name is Ollie and joining me today we've got Steve. How you doing, Steve?
I'm good. How's the weekend loss with the trial games?
It's only a trial game. I won't think too much into it, but oh my god, the bunnies are looking decent. All right, so let's move into the agenda for the video. So for all of our returning viewers, this will look very familiar. For any of our new faces here though, this is how we normally run it. So starting out, we'll take a look at the major events from last week, take a look at our key themes in price and see how these move the markets. We'll then move into the week ahead section. We'll put a spotlight on a couple key different markets and analyze them, give our take, see how these fit in with our price themes, and give our take on where we think they'll go. We'll then move into the technical corner. We'll put a spotlight on a couple key different markets and analyze them using our technical indicators. And lastly, we'll move into the Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week. As well, just want to reiterate to everybody as well that anything we discuss in this video is general in nature. Any projections Steve or I give are not guaranteed, and past performance will not always be a reliable indicator for future price movements. So moving now into the top traded products from last week. I think the most notable one for me is seeing the dollar yen back into the top 10. But how about you, Steve? Any surprises?
Yeah, no real surprise, especially with the indices as well. So yeah, also seeing the USD JPY, no real surprises. But we'll look on to last week to see what kind of moved the market. So last week we did have lower liquidity throughout the whole week. Obviously, we had China with the public holiday throughout the week. On that Monday, we had the US as well as Canada off, so a bit of low liquidity. Saw more of a sort of range-bound price action across a lot of the, whether it's commodities or currencies. We saw a lot of range-bound. So first things first was probably the Reserve Bank of New Zealand, so held at 2.25, which saw the Kiwi dollar just reach a sort of 7 months high according to charts. So the sort of summary out of that sort of meeting was the cautious sort of balance expected to be within the sort of target band for the RBNZ by this quarter. So it'll be interesting to see with that. It does look like there's more of a wait and a hold approach when it comes to the New Zealand dollar, but we'll see how that progresses. But the big surprise was the local, so Aussie unemployment rate was actually 4.1 compared to the expected of 4.2. Just bear in mind that the participation rate was actually lower than previous of months, so we've got to bear that in mind. But it will put a bit of more strain on the RBA when it comes to the next meeting. So there is still only a 9% chance of an interest rate hike in the March meeting. And then we basically skip, there's no April meeting, so the next would be a May meeting, which is likely based on a lot of the big four banks. We're looking at probably a May interest rate hike, so it'll be interesting to see how the rates kind of the interest rate tracker kind of tracks when it comes to that. The UK, a lot of sort of data points stronger than expected, although with the UK highest of like the CPI came in as expected, but the economy is looking a little bit stronger. But most of the week was really around the US data, as well as the FOMC meeting. So the minutes came out with the FOMC, which showed it was more of a hawkish meeting. So Fed officials indicated further sort of rate cuts, but they also suggested that the sort of pause for now, and to actually resume potential easing later in the year, which saw the surprise reaction. So it did impact, for example, commodities like gold, for example. Obviously, with the easing cycle, that's generally an indication of the more easing that it is for gold, as well as the DXY throughout the week was a little bit stronger towards throughout the week until the end. So towards the end of the week, we saw the US GDP data. So Trump actually came out before the actual data and actually indicated that there was going to be weaker data. So it's interesting that he actually came out on his social media to actually indicate that. But we saw a bit of reaction across the GDP. But the most notable event last week was probably around the US Supreme Court ruling against tariffs. So we'll deep dive into that into this week. We also saw the Clarity Act delay, so any sort of crypto um, yeah, traders. Basically, Trump's given the sort of first March deadline when it comes to the crypto legislation. So, Clarity Act is just defining whether it's a security or commodity when it comes to just clear rules and just a framework in regards to crypto. But yeah, we'll deep dive into this week first, and then we'll look at the tariffs and what that really means for the market. This week we do have public holidays. Again, Ollie, your favorite when it comes to public holidays, especially Japan. Notable that Japan's on public holiday. But yeah, we do have the CPI for Australia. So we'll see how we're tracking when it comes to inflation. That's going to be key when it comes to the RBA decisions. I think it will be looking at that sort of data and seeing how inflation is compared, considering that inflation is the biggest sort of theme for the RBA. The Bank of Japan, so the inflation will also be key, considering the IMF has actually recently, outlined last week in regards to Japan and the likeliness that they do think that they need to actually consider rate hikes. Yeah, so it'll be interesting to see how that sort of data impacts Japan, for example. We've got the US data when it comes to jobless claims, as well as PPI, as well as Canadian GDP. But the key will be really around the tariffs. So to give you perspective, on Friday evening, basically there was a Supreme ruling, so 6-3 vote, that tariffs that Trump did apply basically illegal, so not within their sort of constitution. So what we saw Friday evening is that Trump actually retaliated. He was a bit, I would say, emotional, if anything. He basically replied with a 10% global sort of tariffs and then 15% on the Saturday. So he's basically changed his mind a bit. But to note that these actual tariffs that he's looking to apply, basically they fall under a different sort of act within the legislation, but these could maybe actually last for only 150 days, and then he will actually look at different legislation to impose for longer. But the amount of paperwork required, as well as all the approvals that need to go through, it could be that 150 days will stand. But what are your thoughts, Ollie, on the latest of Trump and his tariffs, for example?
I mean, it just seemed like a bit of a knee jerk reaction, to be honest. Like, there's been a lot of chat about the tariffs, what the Supreme Court ruling would be. And I mean, personally, I was like, surely they would have had a contingency plan in place should this have happened. It seemed like a bit of a knee jerk reaction, almost like they thought someone was going to push through. But we're definitely seeing the markets react to that at the open today. Gold's up for the day so far. Seeing a lot of the risk assets are down, shared in the equity markets as well as the crypto markets that you saw. But I think everyone's kind of just waiting for a headline to see what goes on with it.
I think that's a key point actually that you mentioned, Ollie, is that obviously the risk-off sort of approach, so safe haven inflows, as well as a lot of people just uncertain about knowing the actual tariffs, but also tensions between Iran and US. So basically, Trump's given a sort of 10 to 15 days to reach an agreement. So a little bit of uncertainty, which means a bit of volatility, especially in commodities. So risk-off like gold and silver, for example.
Absolutely. All right. This might be a good time to transition into our technicals. So let me share my screen with everybody. So starting off, we've got the euro against the US dollar on the weekly. Quick little tidbit on this before I jump in. I saw a quote that the EU apparently is very much not happy about this tariff rise from Trump, basically saying that they're going to be exempt from it or there's going to be an issue from the back of it. So very interesting to see how this pairing moves as that develops. But going back to euro dollar on the weekly chart, so we can see we've been in a pretty strong bullish trend, essentially since the start of 2025. We can see this is supported by a series of higher lows alongside higher highs, making a high on this bullish trend towards the end of January here. Even though we are seeing the prices take a bit of a horizontal turn, there are still the higher highs and the higher lows in there. So it's telling me there is still the bullish momentum. This is shared by our moving averages, which are all fanned out, evenly spaced out, pointing in the same direction, which is telling me that there is still some bullish momentum in play. But to play on the other side of this one, though, we are seeing some convergence on our MACD. So if we do see the MACD slip below its signal line, this could be a signal of a change in momentum, where we're seeing here. This is also shared by the RSI, which essentially are touching on here right now. We're waiting for some divergence on either of these indicators here to give an indication of where the prices could be moving to. Most recently, we did see a break above the 1.2 sort of area and a quick sell-off since. And right now, we are hovering around the 1.18 level. So moving into the daily chart to get an idea of where we could be sitting for the week right now. So as I said, we made the high above the 1.2 and a quick sell-off here. But prior to that, we did see prices find resistance at the 1.18, have a strong sell-off towards its moving averages, and it had a fairly sizable bounce off. Since then, we've seen the prices come down and actually find support at the prior resistance, which does add to the bullish pressure. We then saw prices bounce off this level and failed to make a higher high and instead actually made a lower low. So it's telling me there is some bearish momentum in here as well. But for the week ahead, I do want to see if the prices are going to find support at these key moving average levels, potentially make a push to break its prior swing high and then test on a yearly high. Similar to that, though, I do think if we do see the prices come up, find resistance at the 1.19 again, we could see it then make a lower low to trade further into its moving averages. For this sort of level, though, if I am a buyer, I'll be looking to keep my risk management at its next key level. So if I'm getting in now, I'd probably be looking towards a swing low. Similarly, though, if I'm a seller, I'd probably be looking towards the Friday highs up around this level too. As I say, I'm looking for a signal to confirm, seeing some divergence in the MACD suggesting bearish, but I'm also looking at the RSI looking like it wants to cross over its signal, which is suggesting bullish. So definitely a wait and see for this pairing on here for the week. And the next market I wanted to move into is the ASX 200, otherwise known as the SPI 200. So right now we're on the weekly chart. So reason why I wanted to focus on this is because, I don't want to see that, because we did see the ASX 200 reach an all-time high last week before quickly selling off. We do have the CPI coming out this week as well, so that will definitely impact the likelihood of a rate move, which we could see some volatility on the ASX 200. So looking in here, essentially starting from April, we've been in a pretty strong uptrend. This was around the tariffs time, but we've been in a pretty strong bullish trend. We reached an all-time high in late October, sold off to trade far into its moving averages, finding support just below its 50-day moving average, and then having a pretty strong uptrend to then trade at an all-time high before selling off. You can see the bullish trend. I'm seeing a sequence of the higher lows alongside high highs, even though we are kind of flatlining at the top here, but I'm looking for a signal of confirmation to tell me that the bullish momentum is in play to then challenge, break this resistance at its all-time highs and then carry on further. Moving into the daily chart now, get an idea of where we could be sitting for the week. So, as I did say, last Friday we did see it touch on an all-time high and a pretty strong sell-off. And then today we are actually down 0.42% on the day so far. But I'm looking to see if the bullish trend will stay in play. So, first key level I'm looking at is around the 8,900 price point, which did act as a resistance at the end of January before selling off. So if we can find support at this level here and hold that support, I do think we could be then seeing a retest of the all-time highs. And a break of that, we could see it then travel to its next psychologically significant levels. Similarly, though, if we do see the prices break this level here, we could see it then trade into its moving averages around the 20-day moving average. Break lower than that, we could see it move further into its moving averages. But overall, if I'm a bull, I'm looking for it to find support, looking for prices to find support at one of these key levels, hold, consolidate, and then make a push for a higher high. Similarly, though, if I'm a seller, I want to see it first break this next key level, break its first moving average, where I'd be looking for a target to trade further into its moving averages. If I'm a buyer on this market, I'm probably going to be keeping my risk management around this resistance level where we can find support. But similarly though, if I am a seller, I'll probably be looking at this key price level around 9,000 as well as quite significant. So that brings me to the end of the technical section now. So we'll move into the Q&A where Steve and I will answer some of your guys' most commonly asked questions from last week. So Steve, would you like to take it away?
As for question one, it's how can the IMF influence central bank decisions? So IMF basically stands for International Monetary Fund. So basically the International or IMF has basically been set up to provide the technical assistance to enhance central bank operations, so such as improving forecasting techniques as well as managing foreign exchange. So recently they've actually come out and they've put basically Australia in the spotlight when it comes to the inflation. They've also last week mentioned about Japan and just looked at their policies and really providing that sort of guidance that each of the central banks can really look at to actually implement for future interest rate decisions. So I think it does influence a little bit because you're kind of putting the spotlight on certain countries and really making them accountable to their sort of decisions coming up. So I think it does play a part, especially, considering that coincided with the RBA decision. So they mentioned about the inflation being high, and then the RBA did actually increase the recent RBA decision. So I think it does count for a little bit when it comes to their overall decisions.
Thank you. And I'll take it away for question two. So, do you consider silver risk on or risk off? So, in a way, silver can act as both, but personally, I see silver as much more of a risk on asset. Reason being that prices are particularly volatile due to the factors that can swing prices in either direction. So, prices for silver in particular are subject to strong industrial demand due to its use in electronics, solar, manufacturing. And as a result, we can see prices move a lot more similarly towards equity markets, which are driven a lot more by speculation rather than a store of wealth, such as assets like gold. That being said, silver can also see some strong safe haven flows during times of geopolitical tensions, acting similarly to gold. So there is an argument to be said it could be risk on or risk off, but personally, I do see it a lot more risk on. Particularly due to the volatility factor in silver, which we have been seeing over the past few weeks, which can function as a sentiment amplifier on reaction to major market headlines. Okay, so that brings us to the end of the video today. So a recording of this will be uploaded on YouTube once we have concluded. As well, we will be posting a link to this in our VIP chat room as well as on Telegram. For anyone who is looking to get involved with the Monday Open and send through any questions, please feel free to reach out to Steve or I directly or reach out through any of our channels. And that's all from me today. Thank you everybody for watching, and Steve, I'll see you later.
Thank you, Ollie. Enjoy your evening, everyone.